Hi everyone, my name is Yan Ling. Recently, I was assisting a client with the decoupling process, and I also have some friends asking me about decoupling. Therefore, I decided to do a video to provide more clarity and more insight about decoupling and some of the things to take note before you decouple. Let's take a look. Firstly, just a quick intro about decoupling. What is decoupling? Should you really do it? And what are the costs involved? One of the misconceptions about decoupling is that people thought it's divorce. Decoupling is not divorce. Here's a quick definition of decoupling. Decoupling involves an owner of a property transferring his or her shares in the property to the remaining co-owner so that he or she can be free to purchase another property without paying ABSD. So most husband and wife actually use this method to reduce the ABSD payable when purchasing their second property to invest. For example, if you are planning to buy a second property at $1.5 million without decoupling, you have to pay ABSD of at least $255K. But by decoupling, you can save this amount and use it for any other purposes such as renovations. Sounds good? However, not everyone is able to decouple because it depends on what property you are currently owning as well. If you are owning HDB, you won't be allowed to decouple unless you are transferring the flat ownership between parents and children or buying over your ex-spouse shares. But as a married couple, you won't be allowed to sell your shares to the other party to buy the second property. This is for those who are owning HDB. However, if you are owning a private residential property, be it condo or even landed, you will be able to decouple without much restrictions. Next, what are the costs involved to decouple? First, buyer stamp duty. This buyer stamp duty is payable by the buyer based on the market value of the shares being transferred. And you may need to pay seller stamp duty if you decided to decouple within the holding period of 3 years. So usually people will only decouple after 3 years so that they do not have to pay any seller stamp duty. Next, valuation fee. You will need to pay valuation fees because you will need to engage a valuer to determine the market value of the property. So the valuation fees will usually cost about $300 to $500. Lastly, you also need to pay legal fee for both buying and selling of shares. Next, what are the things that you should take note before you decouple? Firstly, the spouse buying over the shares will have to ensure that he or she is able to secure a fresh loan from the bank to finance the transaction. If there is an existing mortgage, it must be restructured first to remove one party as the owner. After selling the shares, the CP money used plus accrued interest will have to be returned back to the seller's CPF OA account. If you are below 55 years old, you can then use the CPF money again to purchase your next property. So this is usually how married couples own 2 properties without paying ABSD. Okay, lastly, let's work out some financial calculation together. For example, owner A and B, they are married couple and they own a condo with the valuation $1.5 million. The outstanding loan is $200K, and A wants to sell his shares to B so that A will be able to buy another property to invest. Both of them own 50% of the shares, so the selling price will be $750K. Hence, the outstanding loan will be 50% each, which is $100K. Assuming seller A needs to return $200K to CPF including accrued interest, the cash proceeds from decoupling will be $450K. For buyer B, he will have to pay 25% down payment of the purchase price. The 5% has to be in cash, and the remaining 20% can be either paid using cash or CPF. And the remaining 75% of the purchase price will be under bank loan, provided that buyer B is able to take maximum loan. As there is still outstanding loan, the new loan amount will be $100K plus $562,500, which total is $662,500. Assuming that the interest is 2% and buyer B is able to take out 25 years loan, the monthly mortgage should be around $2,808. If buyer B is earning more than 6K per month and if he or she is below 35 years old, the monthly CPF contribution should be $1,380, and he or she can actually use this amount to pay for this monthly mortgage and pay the remaining in cash. The expenses of the whole decoupling process will be $23,600, assuming that there's no SSD. Hence, in this case, the net cash flow that you will get from decoupling is $450K minus other expenses, which is $388,900. Usually, people will use this money to pay for the next property down payment. In regards to the mortgage loan of the second property, people will usually use the rental income generated from this second property to pay for the mortgage loan. In other words, the tenant is paying the loan for you. So this is how decoupling works, and most married couples will actually use this method to reduce the ABSD payable in order to buy their second property to invest. Of course, this method may not be suitable for everyone as both husband and wife must be working in order to be able to finance a loan. The best thing is to do some financial calculation first to see if this method works for you before purchasing any property. With that, thank you so much for watching this video. If you like what I just shared, feel free to give me a like and subscribe to my channel. Thank you and see you in my next video. Bye!